Welcome to Mex Moves, the weekly podcast where Damian Fraser and I, Eduardo Garcia, break down the topics and headlines shaping Mexico's business and financial landscape. Hi, Damian. How is everything?
Great, Eduardo.
Great. This week we have an interview with Adriana Rangel, head of LatAm distribution at Vanguard, one of the world's largest investment management companies, to talk about how Vanguard is promoting savings in Mexico. In addition to that, Damian and I will talk about the impact of higher tomato and tortilla prices on Mexico's inflation rate, how new bank Plata has also raised new capital, Herdez restructuring its ice cream business, Grupo Salina's participation in the motorcycle business, and Nissan expanding operations in Aguascalientes, which is becoming apparently its main hub. So, Damian, you want to start with tortilla, tomato prices?
Sure. Well, one of the, if not the big economic topic right now is obviously inflation, which is rising at about 4.6% on an annual basis. May well pick up further because of the increase in energy costs related to the conflict in Iran. But there are two items that are driving kind of headline inflation, one in particular, which is tomatoes. There was a great column by Enrique Quintana in El Financiero mentioning that depends where you go, but tomato prices per kilo have basically more than doubled. They're over 50 pesos, some places up to 90 pesos per kilo versus 25 pesos a year ago. And obviously Mexicans, as you know, Eduardo, being a Mexican, can't eat anything without having a tomato on it. It seems to be almost requisite as what if you want a Mexican passport to have tomatoes with your food. I read somewhere the Mexicans are the largest per capita consumers of tomatoes in the world. Now, why? That has a big weight in the inflation index because of that. And tomatoes have always been very volatile in the inflation index because obviously, like most products of that nature, they're subject to weather and how the crops went and so on. But I think there's some specific issues that seem to be affecting it. The water shortages, 2 years back in northern Mexico meant that many fewer tomatoes were planted. So production area apparently declined 20 or 30%. We've also had some cold weather, which has reduced yields. We've also had rising input costs, fertilizer that's made it less profitable at the previous prices at least. And then you also have insecurity. So Sinaloa is a big tomato producer as a state, and obviously there's been a lot of conflict in Sinaloa, especially recently with the fight between the Mayitos and the Chapitos, and that might have also contributed to less planting and more scarcity and this big increase in prices that you've seen. There's also been, Eduardo, a big debate here in Mexico about tortilla prices, which the president has sort of waded in on in her mañanera. There's a bunch of different tortilla associations. There's the National Tortilla Council, which seems to be a bit more aggressive and anti-government. And they said that tortillas would go up from 2 to 4 pesos per kilo. Depends where you go, but roughly tortilla per kilo is about 24 pesos. So that would be 10 to 20% increase. Another more pro-government, more institutional association, maybe the National Union of Industrial Tortilla Producers. So that's not going to be necessary. So we're not exactly sure what's going to happen to tortilla prices. But we're already seeing some increases, and it's being driven by higher corn flour costs, obviously higher electricity and gas costs, and transportation. So transportation, everyone wants that tortilla fresh, so transportation and diesel costs are very relevant there. I think the government is really focused on tortillas because obviously it's a staple part of the diet, it gets a lot of attention. And when people see tortilla prices going up, they want higher wages. Other people put up other prices using tortillas as a benchmark of sort. So inflation has become, I think a big issue. I think the president has talked about it pretty much every day. She's desperately trying to put a cap on fuel prices by increasing or reducing the tax on diesel and gasoline, but also kind of naming and shaming gas stations that raise beyond this kind of agreed cap. And in some cases, closing down gas stations because, allegedly they're not complying with environmental rules or whatever it might be. But the reality is that they're not respecting this kind of informal price cap that the government is trying to, trying to put in place to stop inflation going up further and undermining their, political popularity. So that's the inflation. Obviously, as we talked about last week at some length, so we probably don't need to go into that again. The central bank, cut rates, which it was a 3-2 decision. Some economists supported it, especially economists outside Mexico. Some in Mexico sort of have criticized it, given that inflation's been going up. But it's made inflation, central bank sort of monetary policy a continued sort of trending topic here.
The inflation number is something that it seems to be creeping up into the radar of the Mexican government. Obviously, as prices go up, the popularity of leaders goes down. You can see it in this country as well, that inflation has even peaked above 3%. The measurements that the government is using to curtail the price of fuels seem to be somewhat working, but on the other hand, you have also seen concerns growing about the level of the government's debt to GDP ratio. And that is something that will undoubtedly be of great concern, as if the government needs to continue subsidizing gasoline prices. The IMF, you saw it revise upward its growth prospects, but it also highlighted that Mexico will probably see its debt to GDP ratio above 60%. Now, tomato prices, as you said, are quite heavily important in the overall index. It could be something temporary, but what you mentioned about the yields coming down, the lack of water that we suffered 2 years ago, those are a bit more structural probably, or the conflicts going on in Sinaloa that doesn't seem to be getting any easier. So those prices might not come down later on, bringing the overall inflation rate down, as it happens sometimes. So it's going to be interesting to see what happens on that arena. On the tortilla prices, I've seen conflicting reports from here that they are rising, not raising, so on and so forth. But again, there is no doubt that prices is coming as a great concern for the government, and it should be, as it pinches people's well-being and wallet. So we'll have to wait and see.
So should we move on to fracking? Because that's another subject that's become a headline subject, especially in the morning press conference, the Mañanera. As you probably saw, the president basically announced a U-turn, saying that Mexico was going to allow for fracking, or sort of unconventional sort of gas exploration. And she's put up a commission with a bunch of academics, but they've got 2 months to report. And I think we can guess that they're going to say that this is, under certain conditions, should go ahead. The driver of this is that Mexico imports about 75% of its gas from the United States, and the view not just in the government, but in many different circles, is that that's an excessive dependence. Makes Mexico vulnerable geopolitically, and in addition to that, there's as Mexico shares many of the same geological characteristics of the Texas shale gas area in the so-called Burgos Basin. The view is, there's also a lot of gas to be exploited and money to be made, and Pemex to be strengthened and tax take to be increased. So you've got this dependence and you've got this opportunity. Now, I think everyone so far, well, not everyone, but many people would agree with those 2 points. The problem, as I see it, Eduardo, is that Mexico is in a way suffering from being, next to the US and connected to US gas, which is basically free. It's not free to Mexico; they have to pay transportation costs, but often the US producers even give away gas because they can't as a byproduct of more valuable oil. They can't store it, but it's very, very, very cheap. So given how cheap it is, and given that Mexico has these big gas pipelines connecting many parts of Mexico these days to the US, it's very difficult to extract gas on profitably when you're competing against US gas, where they've had 20 years of shale gas. They have very high levels of capital deployment. They have very low cost of capital compared to Mexico. They obviously have huge amount of know-how that Mexico and Pemex doesn't have, and so on. So I think that if Mexico is going to profitably increase significantly its domestic gas production, it's going to have to raise gas prices, but that would be very damaging to the CFE, which depends on natural gas from the US for most of its electricity production, or bad for electricity users, i.e., all of Mexico. So it's not an easy one to circle. Now, eventually, and some people say as soon as 2030, US gas production, shale gas production, will start declining. So I think really what's happening here is that Mexico's kind of preparing for a moment in the 2030s. And no time is too soon for this, when US gas becomes less abundant, and then Mexico can maybe even eventually replace it. But obviously, for that to happen, you need legal and regulatory certainty, which up to now you haven't really had. We'll see what happens. And then you need a combination of local know-how, Pemex know-how, with international know-how willing to come to Mexico, and then economic terms that are sufficiently attractive, because, and in some cases at least, the royalties that the private sector players have had to pay Pemex or the government have been too high for it to be a good business. So quite a lot of conditions need to happen. But while the US is so ultra competitive in natural gas, and while Mexico is basically integrated with the US, it's going to be difficult to see Mexico, competing. It's be like competing with China and making shoes 20 years ago. The US is just too good at it, and Mexico is too connected.
It makes sense that they open it up. It was funny yesterday watching the president defend her U-turn in fracking. I loved it because reality bites, and I wonder whether this is the first step of many where the current administration will have to backtrack on its ideological positions, sometimes that make no sense, economically speaking. But it was quite interesting to see her defending fracking now, not necessarily that it's been approved or that it will take place, but that they had created this commission to let them know whether it's feasible, environmentally sound, and all this and so on. I loved it in a way. But you're right. The U.S. produces natural gas at a very cheap price. It's going to be very hard to compete. I don't think Pemex has the know-how. I think the president, at least she has already made the transition to allowing fracking. The next step is that she will have to make the transition to allow private companies to do it on their own. Obviously, she hasn't said that, and we're far from that, because she says that Pemex will be leading all the ventures in that area. But maybe when the U.S. declines, its capacity on the other side of the border, Mexico, will be the solution to produce gas at a cheap cost. But it's far from happening. I'm happy that it did take place. There are environmental concerns that should be taken into account without any doubt. And I hope that for that the scientists do bring in elements to prevent damaging the environment. But it's an interesting transition that the Cuarta Transformación is facing, due to the fact that we've been so dependent on U.S. gas. They took 8 years to realize it, apparently.
That's right. It's expensive, right? Because these, we're talking about having to get to their goal of quadrupling gas production and eliminating dependence on U.S. imports, which isn't going to happen in our lifetime. It's $3-5 million, a hole, and you're talking about 3,000, 4,000 different holes. So it's a lot of billions of dollars. And when your cost of capital is high, which it is in Mexico, and when it's, so far at least, there isn't a great track record in doing this, it's going to take some time. But I think it's great that we're starting, and I think that 2030, who knows who's going to be president of Mexico 2030, Claudia will still be president, so we do know that. But let's say the end of 2030, who knows what will happen, and you've got to get going. So moving on, fintech, Plata, which we had Neri Tolado, who's the CEO in Mexico. We had him on podcast a few months back. Anyway, they congratulations, they raised another $405 million in a Series C. They've got a $5 billion valuation, they said, which is pretty impressive. I think it's the most valuable private fintech in Latin America at this point. And it's only just a month or so ago got their banking license, and they came after some of the other better known fintechs like Story and Klar and Nu and so on, and Nu in Mexico, and have leaped ahead of many of those, except for Nu, which is bigger, but they've leaped ahead of Klar and Story by most measures. So and they've got some quality investors, Bicycle Capital, the sort of former SoftBank LatAm people led it, Qatar Investment Authority, Sovereign Wealth Fund, BTG Pactual, the Brazilian financial giant, also came in, and then some of the other previous investors seem to have contributed as well. And there's reference in the Mexican press to a long-only quality institutional fund, which presumably didn't want its name given out at this point. Now, Plata has reporting losses, but that's not how people look at fintechs in their growth phase. They tend to look more at their risk-adjusted sort of financial margin before their operating costs. So how much money, what are the unit economics, or how much money they're making on their loans, with a view that over time you can reduce your operating costs as a percentage of revenues as you get bigger. And Plata has a attractive risk-adjusted financial margin. So that's basically the difference between their interest income and their interest expenses minus their write-offs. And that's, I think, one of the reasons why investors are quite attracted to it. How are they achieving this? I mean, basically, Plata, at least 100, maybe 200 of the Plata employees came from Tinkoff, this big successful Russian fintech, now called T-Bank. And so they kind of came with a lot of know-how, a lot of sophistication in engineering and in data science, and they applied that to the Mexican market. And I think in addition, people, now that they're becoming a bank, are going to assume that they're going to have further revenue streams from their current credit card stream, personal lending, payroll lending, investment products. Then they're going to assume, correctly, I would guess, that their funding costs are going to go down. They've been paying a lot of money to hedge funds for their funding up to now. So that's going to improve their financial margin. And then the final part is that right now, massive operating costs. They spend a huge amount of money on marketing. Is going to come down as they get bigger and stop growing so fast. So this Saturday, they're actually sponsoring a concert in the Zocalo with the Andrea Bocelli called Romanza. So that's going to be a big Plata event, which I'm going to be going to, I'm happy to say. So the idea is that once they control for all these variables, it's going to become profitable. We'll obviously have to see if they achieve that, but currently, at least, some relatively well-known investors are buying the story.
Impressive, I gotta say. I mean, the valuation of $5 billion that you mentioned, Damian, it's quite something. I mean, the revenue, according to white paper, has grown also. So maybe that's one element that attracts people. Like you say, they're not looking at the bottom line. They're looking at all different other variables to try to assess the future of the company. But yeah, all the neo banks or the new banks, the new platforms for banking in Mexico are allegedly growing their customer base and the revenue base. And so we'll have to wait and see whether this can continue or whether it will be consolidated in the future, like it happens in many industries as they mature. But kudos to Plata in that sense, and good luck in the concert, Damian. Sounds fun.
I hope so. Me and 100,000 other people.
Exactly.
So yeah, I mean, now that it's not easy getting to 3.5 million customers. So what they've achieved is impressive, like the other fintechs. But I think now is the real test when they become a fully regulated bank and have a deposit base and a bunch of other products and look for what they call principality, becoming the main bank of their customers. Now, this is going to be the real test. And I don't think they'll be able to IPO until they succeed in that second phase. I don't think it's doable to IPO sort of basically a credit card business. But, the bet is that they're going to IPO. And if the existing the new investors are going to make their money, they're going to have to IPO this thing at, 10 billion. It's going to be, one of the biggest in a year or two. Be one of the biggest banks in Mexico. It's already bigger than Bajío and Banregio and some banks that have been around for forever, let alone the other sort of scores of private banks that are not in the stock market. So Grupo Salinas, Eduardo, they announced milestone 10 million motorcycles assembled in Mexico by them. They sell Italica, I guess that's their best known brand, Benelli, Morbidelli, Hero. They have a big plant in Toluca, 1.2 million a year. Another plant in Guadalajara. So I think their capacity is about 1.6. And it's really, their market share at one point, they've been around for 20 years, was over 70% of motorcycles, which is pretty amazing. It's come down a bit, depends on where you read the data, but maybe it's down to sort of 50%, 55%, which is still pretty amazing. And I think they were able to achieve it because at the time, and still to a large extent today, they kind of, they ticked all the boxes to be successful. They have obviously Electra as a distribution arm throughout the country. They have Electra through Banco Azteca as a credit, and they had their own assembly of motorcycles where almost all the parts came from China. So they were able to sort of put together the full package, and people might be able to compete, just on the assembly side or just on the distribution side or just on the credit side, but no one was able to sort of bring all of those things together. And as a result of that, there are the overall motorcycle sales in Mexico and usage has gone through the roof. Wherever you go now in Mexico, you see motorcycles, and it's been hugely positive in terms of cutting people's travel time from work to home and in the cities and the countryside. And I think it's especially important because public transportation is often very inadequate and slow. So a bunch of people in my office come by motorcycle, and they say that it takes them 30 to 40 minutes by motorcycle, and it takes them 2 to 3 hours by public transportation. And the motorcycles are pretty cheap at this point. So you can buy a kind of entry-level motorcycle for $800 or so. So it's not a huge cost, especially with minimum wage going up and average wages going up. A lot of people can afford that, at 3 or 4 months salary after necessities are taken care of. So now the flip side is there have been a lot of, as you would expect, a big increase in accidents and deaths. It's a pretty dangerous way to drive in Mexico City, especially, probably in Guadalajara and Monterrey as well. So I was looking at some data. The motorcycles are 11% of vehicles, but 43% of deaths on the roads. And the Mexico City is trying to clamp down on motorcycle usage without helmets and make it less dangerous than it is. And then the other thing you've seen, Eduardo, is that with the massive growth of the gig economy, delivery drivers, using motorcycles for the most part, the motorcycle has now become a kind of working capital for hundreds and hundreds of thousands of workers who are in the gig economy and working full or part-time as delivery riders. That also changes a little bit the economics, because instead of selling lots of motorcycles to individuals that are willing to, accept very exorbitant or punitive credit terms, you're now often selling motorcycles to big enterprises, and who are obviously much more price sensitive or much more credit sensitive. Now, Rappi doesn't buy the bikes for its workers, but you are seeing kind of bigger fleet management entities coming in and presumably cutting a bit the credit margin. And then the other thing you've seen is competition, which is great, and one of the reasons why prices have come down. So there's just a big announcement about a very large Indian motorcycle company called Bajaj Motor Drive. They're investing $145 million in a plant in the state of Mexico near the Grupo Salinas Toluca plant. They have a target capacity apparently of 500,000 units per year. Existing capacity is 200,000. So they are, I think they're already number 3 in Mexico. So you're seeing more players come in, and let's just hope that the quality of the bikes, is good enough, and that that the authorities put in place the appropriate sort of safety regulations so that the accident levels, which are too high, come down a bit.
Really, what the motorcycle business of the Salinas Group, it's genuinely a fascinating company. It's not covered enough, I think, in the Mexican business media. The way Ricardo Salinas has transformed the company from importing everything to assemble everything here now. It's fascinating, the capacity they've reached. I mean, it came at the right time, at the right moment, probably, and helped Mexicans move in urban areas where traffic has become an issue, as you said, and cut down on transportation time with a fairly good product. And now Salinas offers a wide variety of types of motorcycles, even electric ones. And so it's one of those companies where he was an entrepreneur and did it very well. And they've even grown in Guatemala and Honduras and other places where Electra has presence. So the company is very successful. Glad to hear that it's facing more competition, as you and I are always in favor of that. And the problem of the accidents is real. I mean, before moving here, you can see motorcycles on some of the main roads in Mexico passing you when you're on a highway in the periférico, zooming by quite dangerously. It's hard to know how to solve that issue. I see most people wearing helmets, which is obviously very important, but I don't know what else you could do other than ban them from going into these very sensitive roads, but that will impede people from getting to their jobs as fast as they do now. But fascinating business without a doubt.
Yeah, I use a bike, as you may know, in Mexico City every day to get to work and other places. And my concern is the motorcycles are now invading the bicycle lanes because there's so much traffic in the standard car lanes that they fit on the bicycle lanes. So I now have to deal not only with pedestrians and other crazy cyclists, but also more and more motorcyclists. Moving on, Ardez, the packaged food company, I thought made an interesting announcement. They're sort of exiting the operation or the management of its ice cream business, folding it into a 50-50 joint venture with Froneri, which will take full operational control. No cash is exchanging hands. Ardez right now manages Nestlé licensed ice cream business since 2015. So basically what Froneri Ardez JV will be doing is managing the Nestlé brands in Mexico. Froneri is an expert at managing brands that are not its own, and the idea, I assume, is that they're better at this business than Ardez is, and that's why they're willing to fold their business into the JV. It's about 6 or 7% of Ardez sales, so it's not a huge business, maybe $100 million or so, and it's another example of Ardez simplifying its business model. Last year we talked at length about them selling. They used to own 50% and have joint control of the McCormick Mexico business. They sold an additional 25%, so they no longer consolidating that business, only having a minority. And the CFO went left Ardez to run that business. And they also spun off their retail business, the Nutricia Retail, which is now a separately listed company, cafeterias and other types of food and drink retail entities. And they paid thanks to the money from the McCormick transaction, they just paid a massive 15 peso per share dividend, a 20% yield or so last week. So they've become much more focused on their core businesses, mayonnaise, and they've become more smaller, and they've returned money to shareholders, and people who held on to theirs through the ups and downs of the last decade have done very well. The ice cream business is big business in Mexico, as it is, I guess, everywhere, but especially in hot countries. There's been other changes going on. So Unilever, which is was the number one ice cream, they spun off its ice cream business globally to an entity called Magnum. And that's now only does ice cream, and that's trades in New York, London, Amsterdam. And that's will be the main challenge for this new JV with running the Nestle brands to take on Magnum. And then at the same time, Unilever basically sold its food business to McCormick globally. And McCormick was much smaller than Unilever Food, but is now running the combined entity of McCormick and Unilever Food. And in the discussion of that deal, talked about how Mexico was a very promising market. So a lot of moving parts in food and ice cream, but Mexico is quite a relevant market for these big multinationals. And Adez has done a great job at returning capital to shareholders and simplifying the business and helping improve the multiples at which it trades.
Just for our listeners, Froneri, the company which Erdes is joining in the ice cream business, it's UK based, and it was created in 2001 when it actually purchased the Nestle ice cream business, and then it also acquired the US Nestle business. So with this joint venture, it will have the Nestle brands in Mexico as well. And Erdes will also bring to the joint venture other brands like Häagen-Dazs and Mega and Carlos Quinto brands. So they'll have greater offerings consolidated in one company for the Mexican consumers. And like you said, Damian, I think Erdes, although I think the share price went down a little bit with the announcement, but I think it had to do more with the payout of the dividend that had just happened or other things. And Erdes had gone up a lot before. I think the way that Erdes is consolidating its different operations, it's clearer for an investor to analyze how its different components are doing. So I think we'll see much more of Erdes in the future in terms of stock valuation and things like that.
Yeah, so there was some misreporting on that, on the stock price decline. That was entirely to do with it going ex-dividend. So when you pay the 15% dividend, the 15 peso dividend, then the stock price falls to adjust that. It just happened to coincide with this announcement. Should we move to finish with quick takes? What do you have for us this week?
For quick takes, I have Grupo Modelo announcing an interesting strategy to promote sales of its beer brands here in Mexico during the World Cup. It granted 35,000 TV licenses to broadcast football matches in restaurants, local eateries, and consumer centers. They have always been very good at cajoling the places where their beers are sold, and this time they did it through TV license. That's not all. In addition, the company will also distribute, I don't know if you heard this, Damian, television sets, refrigerators, and other equipment for that purpose. So that's part of the 3.6 billion investment plan that started last year and ends in 2027 for Grupo Modelo.
On that, I saw Netflix acquired the broadcasting rights for the Copa Oro and the Liga de Naciones CONCACAF. So a further weakening of Televisa and Azteca's kind of stranglehold of football, and a further sign of Netflix, basically becoming a mainstream kind of broadcaster through a streaming platform in Mexico.
And continuing with sports and entertainment, Constellation Brands, the U.S. company that produces Modelo beers here in Mexico to sell in the U.S., announced the delay of its opening of its Veracruz plant until August or September of this year. Originally, that plant was expected to open up earlier this year. The plant, the company's building in Veracruz was meant to be open 5 years ago, but in the northern Mexican city of Mexicali, as we all know, that plant was canceled because of water issues in that part of Mexico. And so eventually Constellation decided to move to Veracruz. It was going to be open this year, and it might be open this year, but not in time for the World Cup. As the World Cup is coming to an end, it will probably start operations.
So Citigroup said that it will deconsolidate Banamex at the beginning of 2027, and then only after that move towards the IPO. So this mega IPO probably won't happen till next year. Nissan investing $100 million in Aguascalientes for its helping with the production of the Frontier pickup. And it's also moving some manufacturing equipment from Argentina and the CVAC plant in Morelos, in Cuernavaca, that we've talked about. So the CEO of Nissan, who's Mexican, as we all know, sort of talked about how important Mexico was to the company. It's got top market share. It's had number one market share in Mexico for nearly 20 years. I think its market share here is about 18%. So when people were concerned about the CVAC plant being closed, it's clear that it's more about a focus on Aguascalientes, and Mexico still is a key part of their global plans. And that's it from me.
Shall we move to our interview?
Sounds good. So it's great to have with us today Adriana Rangel. Adriana is head of distribution for Latin America at Vanguard. How are you, Adriana?
Very happy to be here, Damian. Thank you very much for inviting me. And I just want to say how much of a full circle moment this is for me, because about 15 years ago, you and I were working together in the equity desk for a Swiss bank. And here we are 15 years later, and you're interviewing me again. So
that's right. You beat me to it. I was going to say the same thing. Adriana was the rock star employee at UBS, and now it's head of distribution for Vanguard. So if you work hard and very smart and very personable, you can get to where Adriana has got to.
Well, and you also have to have good sponsors and people that teach you. So a lot of love here, I can tell.
Right. Well, we're here to talk about this great report, if you're watching this on video, that Vanguard has just published, which is called México, ¿Cómo vamos con el ahorro para el retiro? We're basically going to be talking about Mexico and savings at the individual level for the most part. How often and how much do Mexicans save? Do they save enough? What are the barriers to saving more? And what can the government and the financial sector do about it? So Adriana, give us, if you may, just a quick kind of summary of, from your perspective, the key interesting conclusions of the report, and then we'll follow up from there.
Sure, great. And then just before I get into the insights that we got out of the study, I'd like to share a little bit of why we did this study at Vanguard. At Vanguard, our mission is to support investors and make sure that they achieve investment success. And the way investors achieve investment success is by, saving appropriately and investing appropriately as well. So for us, it's very relevant to understand how much people can save, what is the best way to get to people to save and to make those decisions that are really hard to make in terms of savings, and then to invest appropriately. We also want to be able to bring the Vanguard effect to all of the markets where we operate globally. So as you know, Vanguard was founded 50 years ago. It's mainly a US company, but we also are, Vanguard in Mexico and in Latin America is part of the international division at Vanguard. So we also are operating in markets like Canada, Latin America, Europe, Australia. And the idea is to bring this effect to all the markets where we operate. So we partnered with México Cómo Vamos, this think tank focused on economic growth in Mexico. And we actually did this study 2 years ago, and then we updated it in 2025 again. And we have some really interesting insights. The questions we wanted to answer were, are Mexicans saving? How much are they saving, and could they save more? So really very interesting insights that we got out of the study last year. There's good news in terms of how much people are saving. Over the last 12 years, the amount of the population that is saving has increased from 51% to 66%. But the interesting insight is that out of that 66%, only 29% are doing so in formal mechanisms. So call it a savings account, or have a credit, or have an insurance product. And then the other 71% are saving, but they're doing it in informal mechanisms. So we found out things like this. The infamous tandas are a very famous or common investment and savings vehicle for people. And even people also save, with their homes, or they buy animals. So the idea is that with these insights, we start to create data that can help us drive some policy actions in terms of how do we tackle this opportunity. There's another reason that is very relevant, and you have talked about this in your podcast as well, is like, why is the penetration of these formal mechanisms of savings so low? And that goes to, the dynamics of the labor market in Mexico. You have talked about this before. About 54% of the workers in Mexico do so in informal jobs. So that means that 54% of the population probably don't have access to Social Security or formal mechanisms to save. The one other thing I would say is, even though people are saving both in formal or in informal mechanisms, there has been an increase in the amount of people that are saving. As I said earlier, over the last 12 years, now we have 66% of people saving. And the reason is the prominence of the digital offerings for savings. So we saw the percent of people that are using their phone, either a banking or a non-banking app, to open an account or to manage their savings was 83% in 2024. And this is an increase of 12% versus 2 or 3 years ago. So I would say the fintechs, either non-banking associations that maybe now have non-banking institutions that now have banking licenses, are providing access to the financial system as well, and are also being able to capture some of those informal mechanisms of savings that have existed before.
So there are different possible sort of barriers to savings, right? One might be lack of income, just right. I need to spend everything I have on today. Another might be kind of some sort of cognitive kind of mistakes that people are making. They don't realize that when they retire, they're not going to have enough income to maintain a standard of living. Another might just be kind of not so much a cognitive mistake, but sort of lack of information. Mm-hmm. The other might be, the banks and the financial institutions in general are not making the products available. And then, as you mentioned, probably the biggest is lack of formal employment, with only half the population, a bit less in formal employment. If we leave aside for a moment, because it's too big an issue for you to address or me to address right now, formal employment, what are the kind of other things that can be done in terms of the issues that I mentioned to raise savings?
Yeah, good question. And I think that one thing is that, and we frequently hear like, okay, so you're coming to me and you're talking about saving more, but hey, can really people save more? Like there's this like idea that people don't have enough income to be able to save. So what Mexico Como Vamos did is that they tried to estimate the opportunity from an economic perspective in terms of savings, and then also understand who are these people, because to answer that question, we need to know who are these people that are either not saving or saving but not enough. So what they did is that they divided the income of the population into 10 blocks. So they have 10 deciles. The decile 1 is the population with the lowest income, the 10% lowest income. The 10th decile is the population with the highest income. What they did is that they assigned some savings rate for these 10 groups, going from 1 to 10% as well. And they estimated the opportunity in terms of savings. And of course, they only considered those households that have income above the poverty line in Mexico, which is close to 5,000 pesos per person per month. And what are the findings in terms of people and numbers? There's about 28 million people in Mexico that are either not saving or are saving already but could save more. And the opportunity is close to $1 billion per month. So I think this is like the most important insight of the study, because this really gives you an idea of there's an opportunity for asset managers, there's an opportunity for other players in the market like the banks, the Afores, the asset managers, insurance companies, to tackle this opportunity. Now, to address your question on how do we make these people safe, we also like double clicked into who are these 28 million people, right? The 28 million people are divided into 16 million people that are already saving for retirement. So they're probably in the formal sector, they probably have an Afore account, and they could save more voluntarily. But then there's the 12 other million people that are in informal jobs. And where we even double clicked more, and that's where I think there's even more opportunity, is in those workers they're considered informal, but they're independent. They are either doctors or psychologists, or they work for themselves. So they don't contribute formally every month to an Afore account like formal workers do, but they do pay taxes. And these are about 3.4 million people. So the way to go on how do we save people more, and this is where Vanguard has a lot of experience in terms of how do you make people make these right decisions for their future, is in driving the policy from the behavioral perspective. So when you think about formal workers that are already contributing to their Afore, we believe that there's an opportunity to drive policy change to make individuals that are already contributing to an Afore to be auto-enrolled into the voluntary savings account for the Afore. And what we have seen, for example, in the US, where Vanguard manages a very large 401k business, is that if you auto-enroll people in these mechanisms for savings, auto-enroll, auto-escalate of the savings rate, you see that 97% of people stay saving. And then by the end of the period, they realize they have some money there and they have been saving it and investing it, right? So that's one. Then when you think of the informal ones, we talked about these 12 million and then double click in the 3.4 million that they have the ability to save, they are paying taxes, like we know they can do savings for their future. There's a few things that we have thought about as well in line with Mexico Como Vamos as well. And do you make people sign up in mechanisms when they go and do something with the government? I don't know, you go and get your driver's license, so a mechanism for them to also auto-enroll them while they do this. And then there's another one which I think is key, and you have some invites in your podcast as well. I'll have talked about the relevance of this, but most people don't know that there's benefits to save and invest for retirement from a tax perspective. So those benefits, how to do it, where to go, where to put the money, what you need is the support of a financial advisor. So there's a really big opportunity for the financial advisory practice to be able to support people in helping them understand what are the benefits and how they could access those mechanisms to save and invest for retirement.
Why do you think that opportunity hasn't been properly filled? Because normally if there's a market opportunity, there's tons of people, trying to make money from offering that service. Because in my case, I'll give you an example. I'm obviously reasonably knowledgeable about finance, having worked at UBS for 20 years. When I was fired by UBS, I was given a severance according to labor law, and I could have moved that severance direct to a PPR and avoided paying income tax on the severance. And I didn't. I found out a week after I received it, it was too late. And so if someone like myself, as it were, was not aware of this opportunity, I would think it's relatively widespread, and my anecdotal information suggests the same. There isn't a level of sophistication, even with upper middle class Mexicans who make good incomes, about how to take advantage of these tax opportunities.
That is a very clear example of something we also live with, because we also have at Vanguard in Mexico, we are an investment advisor. So we offer, in partnership with Valmex, a solution for retirement, private pension plans, basically. So we know these situations happen, for example. And yes, we have identified the need for policy to be able to clarify how the money needs to be transferred from, your private pension plan, either to an Afore or to a PPR, and avoid you paying the taxes of getting that money, and also helping you continue and, keep continuity in those savings for retirement. So there is opportunity as well to partner with policymakers and employers and the people at the employers and the companies making these decisions of letting people go, on the benefits of being able to roll over the private pension plan for employees, and the taxing consequences that has. There is a lot of, back to my point on, there is a lot of people don't know that they could do this. People don't know that they could benefit from this. So there's a lot of what financial advisors could do in supporting people manage their finances. And it's not only like manage their finances. Really, the importance of the financial advisor is like, we call them like the moments that matter, things that happen in your life. You get married, you get a kid, you change jobs. Those are changes in your life that also, or you get fired, right? So those are things that trigger financial decisions as well. And the way we started this podcast was like this. There's this resistance for people to make these decisions, and then they end up, impacting their lives in the long term. So that's key as well. We have identified that gap specifically in the private pension plan space, on the opportunity being able to improve retirement outcomes for workers in the formal sector, right? These are people that are in the formal sector.
And why do you think that the gap hasn't been especially well filled up to now? What is it about the Mexican financial sector that hasn't generated enough demand or supply of qualified financial advisors?
It's a good question. I think that there's room for the profession of the advisory practice to be even more prominent. I think according to AMIV, the last number of registered financial advisors, or the ones that are licensed financial advisors, right, are close to 10,000. And there's opportunity, given the size of our population, to maybe increase that to 30,000 advisors in the country, to be able to have a similar ratio to countries like Brazil, for example, or even the US. So I think the opportunity really is, for people to get into the advisory practice and understand how they could benefit, people, families, and then the country in the long term. I think the other part, in terms of filling those gaps, because when we talk about there's 28 million people, $1 billion per month, why isn't, where are the banks and the insurance companies and the asset managers after this? I think we're gonna slowly get there, but we need to be able to keep costs down, because I think that the numbers in terms of the prominence of digital usage, or what banking or non-banking institutions have done to attract people to the financial system, is there. The thing is, we need to be able to make sure that that process continues to be scalable and you can bring more people there. So I don't think it's all, no, there's light at the end of the tunnel, and we need to take advantage of the trends like digitalization. But as long as it's also profitable for these institutions to be able to manage, initially maybe low balances, but that with time can become important balances, with the passage of time.
Yeah, I think some people would say it's because the banks have charged too high fees and not fully aligned with their customers. You have basically fixed income funds paying, incentives are just below 7% right now, so let's say they're paying 6.5%, and there's a 1.5% fee, so you're losing 30% of the yield through the fees, whereas in the United States you might be charged 20 basis points for a fixed income fund. So that there needs to be a kind of more, and maybe Vanguard is going to be the player, a more disruptive force to bring commissions down, so that the vast amount of the yield goes to the beneficiary and not to the financial intermediary.
Well, that's a good point. I think that's what makes Vanguard, able to, to make business and continue to grow. It's not that I'm saying that everyone should have a mutually owned structure, but it's true. There needs to be disruption in terms of in the markets. And I'll give you the example. No, well, and I think there's even an HBR case on this called the Vanguard effect. So wherever Vanguard goes, gets in the market, and then they lower their fees. So then the rest of the industry needs to lower their fees, and that in turn benefits investors. And I think in terms of disruption, we may have started to see something in the Mexican market with these digital players and even those or fintechs that are capturing clients and are, they're offering them a formal financial product to start saving. So you have that at least. And I mean, I think we should expect to continue to see disruption in the market to attract people to save. Then the next step is how do we make them invest smartly? And that's what we do at Vanguard here in Mexico. We partner with other intermediaries in the financial sector. And we also share our best practices in terms of how do you make people save more, designing from the behavioral perspective, and how do you allow people to invest. And then there's also a component of decision making. No, it's also probably in some cases allowing, or let me rephrase that, not allowing people to make so many decisions is what ends up benefiting them more. The auto enrollment into a savings mechanism, the monthly domiciliation from your account, the auto investing feature as well, and then just letting your money stay there. And as we say at Vanguard, stay the course. Like even though there's volatility, there's wars, there's adjustments, the idea to stay invested in the market and put your money every month. If it could be automatized, then fine. That's what we're doing in the market here, so sharing those best practices with intermediaries and with our clients.
In the US, I think Vanguard has a very large, dominant, maybe sort of business to consumer business, B2C business. In Mexico, as you mentioned, I think you work mostly with intermediaries and
correct,
and make the ETFs available to the pension funds, to the Afores. Are there any plans to replicate the kind of US model and go direct to consumer and really transfer those savings to the end consumer? Because right now, a lot of those savings are not actually making their way to the end consumer because you're working with kind of incumbent intermediaries that have their traditional margins to protect.
Yeah, our goal is to continue to work with our clients, to continue our B2B business. And the reason is, yes, in the US, the Vanguard brand is a household brand. Everyone knows Vanguard, and everyone that it's very easy to open your account in Vanguard in the US. But in markets like Mexico and Latin America, the Vanguard brand is just not there, right? And our goal is to continue to partner with those institutions that already have a very large penetration in the system, that offer, all of the financial products. And our goal is to stay working with them. We really don't have a very solid reason to go and try and compete with our own clients.
And how would you compare and contrast Vanguard to your biggest competitor, which is obviously BlackRock in the Mexican market?
Well, it's a good question. I think this is where where differentiation really makes the difference. And this is what really makes us different, which is our ability to continuously offer low-cost investment solutions. And this is because of our mutually owned structure. The funds and ETFs that we manage are the owners of the company, which means that if you buy a fund or an ETF from Vanguard, then you are an owner of the company. So you're an owner. So what do we do with, the profits from asset management? We give them back to our clients, our owners, in the form of lower fees. So we can consistently operate offering lowering fees, and we offer those investment solutions to the clients. And it is very relevant for clients to be able to offer competitive products, alpha to their clients. And, there's also a benefit in having low-cost products to increase their alpha. I would say that that's the biggest differentiator. And we have seen generally when we lower fees in the market, our competitors follow, as I said, the Vanguard effect. But we have really good participation with asset managers as well, a 23% market share with asset managers in Mexico. For the Afores, those numbers are not really very public, but we also have a very prominent participation with them. Insurance companies, private banks, independent advisors. So yeah, and they find very suitable to be able to access financial products with low fees, because the one that keeps with most of the returns is their end clients.
What does it mean, 23% market share with asset managers?
So when you think of the asset management industry in Mexico, which is about 270 billion, I think, the amount of assets that they have invested in international, that's what we think is our market share. We have about a 23% market share of that market. Of course, we have those competitors that you mentioned as well, but we have that participation in the international allocation. That's where we compete the most. We actually have 105 ETFs cross-listed in the SIC of the Mexico Stock Exchange, so that's how clients can access our products here.
Understood. So that's basically through your mutual funds or through your ETFs?
ETFs mostly, yes.
And that's Mexican institutions,
correct,
buying your ETFs or your mutual funds,
right,
on behalf of their clients, basically.
Correct.
Understood. If we go back just to wrap up on the sort of savings, we didn't touch the more than 50% of Mexicans that don't have any formal employment. What do you think, and save a lot less? So what do you think the public sector can do to get those people to save? Because at the end they're gonna retire as well. They're gonna get a small mandated sort of federal pension, maybe a local pension depending on where they live, but that's not enough to live off. What do you think can be done to encourage people in the informal sector, which is more than half the people, to save more?
Good. So two things. I think, and one data point that we also find in the study is about a third of those 13 million in the informal sector, a third, have an Afore account because they, as you know, people in Mexico transition from formal to informal jobs. So a third is a lot that we can tackle within the informal sector. So again, designing a mechanism that can help people that already have an account to continue to contribute somehow, either through the Seguro Social, for example, to their account, or either by other mechanisms or other activities that those people do, would be ideal. And we already have them, right? We already have that third of the 13 million people. And then the other ones is, as I said before, trying to tie the option to save and invest to other government-related activities that you need to do, like go and get a license. So I would say that is a part. And I mean, this may not be enough. The thing with informality is like, it's just, as you said at the beginning of the podcast, we could spend hours talking about how we tackle informality and how we solve for it. But the idea that there is an opportunity that has numbers, that has people behind them, and that we know what are their savings habits, and where we can catch them, through consumption, through the, government activities like going and getting a driver's license. I think those ideas are ideas for, or food for thought for, participants in the financial sector, such as us, asset managers, banks, insurance companies, pension fund administrators, and for policymakers to drive that behavior.
So last question, Adriana, in the report they talk about a gender gap between men and women saving, men saving more. I'm guessing that a lot of that has to do with more men in the formal sector than women, men in general working more than women in terms of paid work. What's your take on the explanations behind this gap between men and women saving, and what can we do to address it?
Yeah, so the study does a really good job in terms of applying a gender lens to the behaviors of saving and investing in Mexico. The gap in terms of women that have a retirement account versus men is 17%. And this is mostly explained by the fact that women that can work, only 54% of them are working, versus men, which is 71% of men that can work are working. So that's one very important driver. But another interesting insight from the study is that when you think of occupied women, so women that are working, actually women between 18 and 30 years old have better savings rates than men. So this is also a very interesting insight, again, for participants in the financial sector, to design mechanisms for women to continue to save while they have to step away for, to give, to have maternity leave or to take care of the elderly or the sick. And the study also finds that being able to close that gender gap in terms of retirement accounts would increase the number of retirement accounts in Mexico by more than 10%. So there's work to do in terms of supporting women in the workforce and to be able to continue to support her, to continue to save while they have to step away, such as, strengthening the Sistema Nacional de Cuidados, daycares, supporting people that are working in the daycares, and so on.
Terrific. Adriana, thank you so much for coming in today.
Thank you very much for
sharing
having
your
me.
views and knowledge, and congratulations to you and to the whole team for this brilliant report. Strongly recommend everyone to read it.
Thank you very much.
Well, thank you very much for joining Next Moves, our weekly podcast on Mexico business and finance. Hope very much you join next week. All the best.